The treasury company trade kind of got started, with strategy. And what they were able to quickly realize is there are sections of the market that want access to Bitcoin that they just can't buy it. It's not within their mandate. If you're running a convertible bond fund and you want that exposure, the only way to get it is to buy the MicroStrategy bonds. Or if your fund is focused on preferred equity or as an allocation to that, well, they have a preferred instrument that you can go and buy. Now, the tricky thing with Bitcoin is that since it's a non-cash flowing asset, you have to be pretty mindful of how you manage that balance sheet to meet those obligations. Now, what's interesting with other assets, like specifically Ether and SOL, are these things are yield-bearing assets. So we've seen a few companies start to generate. We've seen one Solana treasury company and a handful of Ether treasury companies now. And when they start to issue debt and they issue these preferreds, the staking yields from Ether or SOL, they can totally help them meet those cash flow obligations. And then looking further than that, they can actually deploy these funds on chain. So look at Aave. Aave just hit 50 billion in its total pool. So it is of sufficient size where if you have 200 or 300 million in holdings and you wanted to put those in Aave and earn not just staking, but lending as well, you can do that. And then so now you have a thing where you can match cash flows. You can maybe even look to match duration once you have fixed term instruments on chains. There's protocols like Maple Finance that issue those. So now it gives more financing opportunities to the corporate treasurers that Bitcoin previously didn't. So that's why we think this is going to be a pretty big trade over the next 12 months. And you could easily see this move from 6 companies to 60 plus.